So essentially, when I talk to the other asset managers, the heads of trading at 7 other asset managers in Europe about this, we all agree that discretion, if we distill it as much as possible, we mean the customization of counterparties in real time. So customization of counterparties per order, per client, per order client. That means that some orders for one client are different than other orders for the same client, and per market environment. So, I won't go into too many details, but I think you know what I'm talking about. If I call my broker 30 minutes before the open and I'm talking about a stock that I don't usually talk to him about, he immediately knows that I'm talking about a more urgent situation than others. So he behaves or she behaves differently in each situation based on basically how I relay the urgency of the situation. And again, if you want to be more urgent, you're reaching out to more pools of liquidity, but you're taking more risk that someone's going to detect what it is that you're doing. So that's the trade-off in trading. So as an example, I'm going to now compare the OTC to the BCN and how I think they're actually quite simple or similar. If I had a safe strategy, then basically, let's say 10 years ago, I would ring up my broker, my sales trader, and I'd say, I only want you to call long-term investors. I would also say that I only want you to call people that are going to take the other side of my trade and hold it for 5 months. I don't want you to call any hedge funds, for instance. Proper blocks only, so at least 15% of ADV. Maximum 5 clients, and let's actually talk about which clients you're going to call. I've been doing this for 10 years, and we still do it. It's a very cumbersome, manual, slow process, but if you've been doing it with the same guy for 10 years, then you understand one another and what it is that you're trying to get done in a certain situation. But increasingly, in the last, I'd say 2 years, I have the same type of conversation with the administrator of the BCN, that is the pool operator. I say things like, I want no HFT, no stat arb, no ELP, which is market making type interaction. I want no 40 non. I want midpoint match only. These are the types of constraints that I would give to my BCN operator for an order which I want to be traded in safe mode. That is one where there's no urgency on my part, but at the same time I don't want anyone to detect what it is that I'm looking to do. And if we give a dodgy example is one where I'd call my sales trader and I'd say, Frank or Sheila, whatever the person's name is, just call anyone you can. I'll trade any size, I'll trade anywhere with anyone. I just need to get done fast. And tell me who you're going to call. Let's talk about it together. Let's start calling these people in this order. Depends on the broker. A lot of times they'll have discretion. But basically, you can see it's a totally different strategy. And likewise, nowadays, when I have these conversations with the BCN operator, I'll say, for these types of orders, I'm happy to interact with HFT. I'm happy to interact with StatArb, ELP, 40 non, fine with me. I'll trade anywhere in the spread. If the spread goes against me 10 bips, I'll still trade in the spread. So basically, the point is that you get different instructions based on changing market circumstances. But the point that I'm trying to highlight here is that there's nothing functionally that I'm doing in the OTC equity market that I can't do in a BCN. Now, we're not there yet, but this is where I see the industry evolving. And the way I would evaluate their performance, so look at that far left category, or the far left column, that's the venue. And you see exchanges, you see MTFs. I think I'm missing, my slide's bigger than this, and there's a BCN or two at the bottom. But this is how we look at our BCNs and our MTFs and our primary exchanges today. And we looked at sales traders, brokers, in the exact same way 10 years ago, which is basically you look at the number of trades you've done with that vehicle, let's just say. You look at the notional value, you look at the extent to which the stock price moved away from you whilst you were executing on that venue, and you look at some measure of how difficult that order was that you executed on that venue. And so here you get a pretty good idea relatively quickly as you build up large sample size of who's doing well and who's not. So we used to do this all the time for brokers and sales traders. Increasingly, we do it for algorithms and pools. So this gets back to my point about automation. From a theoretical standpoint, when I look at where the industry is going over a 5-year plus window, I don't see anything that can prevent a lot of what goes on in the OTC equity market moving from that little m to that little a within this category of the added value of a broker or a sales trader. Now, there will always be, in my opinion, a need for the manual process of OTC equity trading, but I think the industry has already begun to move a lot of what I've explained into the BCN. So now I'm going to talk about how the BCN could potentially fit into an OTF. Okay, so here's my perception of MiFID and MiFIR, and please forgive me if I'm wrong, I'm not an expert on this, of how the different, I don't know what you want to call them, venues compare to one another. The regulatory process seems to ask the question, is broker capital involved, yes or no, and that determines whether or not you're an SI, and then how large is your order. If it's small, then we prefer to trade on an exchange. If it's large, it can trade on an MTF, but it could also trade on an exchange. So what's missing from this whole picture is discretion. And again, what does that mean? That means customization of our counterparties based on the particular circumstance that we're in. When I talk to the BCN operators in London, if you ask them what's important to them, they say the pre-trade transparency waiver based on reference price is the most important thing to them. Secondarily, what's important to them is discretion. And obviously, they'd like an opt-in for broker capital. Now, we, on the buy side, have a slightly different perspective. And I've talked to the heads of trading at about 7 other asset managers, and they completely agree with our preference, which is the most important thing to us is discretion. So in other words, the most important thing to us is the quality of the counterparties, that is the quality of the product. Whereas for the brokers, what's most important for them is the commercial aspects of the pool. So in other words, the market share, the cost savings of not having to trade on the exchange. So we also think, obviously, we need a pre-trade transparency waiver. We must have that because we're trading large in scale. If anyone detected us, it would just ruin our market before we could get done. Some of the other asset managers I talked to say it would be nice for the brokers to opt in with their capital, but it's not a game changer. It's not a big deal. But what's more important to us is disclosure of what the BCN is doing to the client, not to the marketplace, because that ruins the competitive advantage of one BCN as opposed to another, but to the client. So, and then let's talk about MiFID and MiFIR's perspective. Again, I put other both for crucial and desired because I'm not an expert on what Brussels is what they're concerned with. But I do think that one of the most important things for them is curtailment of pre-trade transparency waivers. So as I said in the prior slides, the buy side wants, or I should say the large asset managers that trade the safe orders, the small urgent orders with large ADV, we need a pre-trade transparency waiver, but we don't need the transparency waiver based on reference price. And so I think that one, I'll get to that in the next slide. I think that Brussels would also like to see greater transparency in terms of what the BCN is doing and curtailment of proprietary capital. So the compromise that we have in mind for an OTF is that it be defined by its discretion. So it's different from an MTF and an SI in the sense that it can customize the counterparty based on client guidance, and this would be peculiar to a trade, or it could be peculiar to all client trades. But basically, that's what would define an OTF. That's if you gave us this discretion and a pre-trade transparency waiver, you give us 80%, maybe more, of what we want from what's going on currently in a BCN, based on the people I've talked to in my own perspective. So, as a compromise, we recommend a pre-trade transparency waiver based on large in scale. And of course, we would very much like to see disclosure of the OTF logic to the client. Negotiable points would be proprietary capital and size of large in scale waiver. And that's the last point I want to make, is that I just have one caveat. MiFID I was in a market environment of 2005 where large in scale for large caps was €500,000. Currently, when you talk to most buy-side traders or heads of desk, we would think that somewhere between a half or a third of that is appropriate for large caps based on how the market's changed. But that's nowhere near So 100 to 250 is very different from what's trading right now in BCNs. What's trading right now in BCNs is anywhere from 5 to 10 to 12. So we think that by taking the waiver to a large and scale waiver of anywhere from 100 to 250, hopefully we satisfy the regulatory concerns of the migration of small orders from the regulated markets to, or excuse me, from the primary exchange and the MTF to the BCN, so that we're only trading large orders on the OTF. That's it. Yeah. Thank you very much for your time.